Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Thursday, the 30th day of October, 2014. And this is the daily report for gold and silver. We have dramatically lower pricing continuing in the precious metals markets, with gold trading off over 1%, silver off 3.5% on the day. We'll get to silver in a second. Gold currently down about $13 on the day, $1198.93. That's the current print on the screen. It's had a high of $1214.50 and a low of $1194.16. Dramatic fall from grace. Traders, a real meltdown is happening in silver right now. 1648, it's off 61 cents. That's correct, 61 cents on the day. The low 1626, the high 1729. If you recall from yesterday's show, I talked about the fact that if we see gold continuing under pressure, we're probably going to see silver go to about $16. Now, it was trading above 17 at the time. It might have seemed a little far-fetched then, but it's certainly a lot more realistic now. I'm still looking for $16 silver. More on silver in a little bit. Traders, interesting couple of days in the markets itself. Of course, the dollar continues to be on fire. The equities markets, we're well over 17,000 on the Dow. That's been run away. And, of course, the announcement by the Fed that QE3, quantitative easing, the bond purchase program, which they have been tapering, by the way, which they have announced would end soon, has actually ended. So we're seeing the tail end of that. Now, we did send out a special trade alert last night here, early morning for many, afternoon for some. And basically what I said, and I'm reading from it, was gold was not able to bounce overseas by more than $1. As the U.S. dollar continues to rise, we see further pressure possible in gold. Sell gold at the market. Now, at the time of this recording, or at the time that the trade alert went out, it was trading roughly 1308, 1309. Hit some lows at 1307, was trading roughly in that area. My recommendation, sell at the market. Those who sold are short anywhere between 1307 and call it 1308. Stop right now should be above, of course, 1231, and of course we're trading below 1200 right now at 1198. Now, when we look at this chart, this is a half-day chart, standard Japanese average format. We can see this rally that came up, and of course, really once we started breaking through various levels, we had a real sense that we were witnessing more than a simple correction, and that was, of course, this right here at 1226. Once it broke through this area, which it did during the Fed minutes being read, we saw this dramatic fall. Now, following that, this is the activity we've seen recently, these last two candles. But following that, I was hoping to see some sort of a short covering bounce, somewhere where we could initiate a short position, because my sense was that based upon the fundamentals and based upon the way this market came out, meaning based upon the technicals, this market was headed lower. And so I was hoping for some sort of bounce. The best I saw was up about $1, and then I saw the market coming under pressure. That's why I put that out, because my sense was that breaking through 1200 wasn't a matter of if, it was a matter of when. I believed that it was imminent at that point, and so that's why I put out that market order. Now, if you're obviously short at 1307, 1308, you've got a couple of dollars there. We'll talk about stops next week on this trade, but really you can see where it found some support. This is the 76% retracement level, and it's a 76% retracement level of this rally. But this is a very, very short-term chart, of course, a half-a-day chart. You really start to see interesting patterns when you start looking at some of the longer-term charts. So traders, I'm going to go ahead and compress this so we can take all of the data and what I'm about to show you in perspective. But small little rally, weekly chart here. Small little rally takes the market from, this is the triple bottom right in here. This is where it touches 1180 for the third time, and it comes up. If you take a look at this one candle here, it's very, very much like a shooting star, small bodied candle, tail at least twice the length of the body. You'd like to see 3 times. Now you do have a small tail here, but that's not that important, but it's the way the candles form. Now, the following week, this week, you get this large red candle. And so traders that have been with me for a while know the pattern that we're looking at right here. And really what you're seeing is a 3-river evening star, the star being a shooting star. So you've got a shooting star, and that, of course, is surrounded by a green candle and a long red candle. Now, that by itself could be an interesting and noteworthy, but it's all of the other factors that make it really, really actionable. You can see a 3-river morning star here. It's a fairly common occurrence for a pivot point to see this kind of formation, because when you think about it on a defined downtrend, of course here it was a little sideways, but on a defined downtrend you have that final kick down, you get the consolidating candle, the star in the center, and then the V is really formed from the beginning of the green candle, so you get that nice V. In the same way, you've got a rally that goes in, you've got your final clip up, that green candle, you get a consolidating candle, that's the shooting star in this case, and then the red candle, so you get your V down. So you're getting that shooting star, but what is most interesting to me is the fact that when we compress this chart, and then take into account the fact that we have this defined triple bottom here, what that tells me is that on a technical basis, if we break through this triple bottom, we could see dramatically lower pricing ahead. And where could we look for the prices to go? Well, that's going to be the topic of discussion, obviously, for next week. But one of the things that we will be utilizing next week, let me see if I can get all of this into perspective, is our long-term Fibonacci retracements, and these are the big moves in the market. And just to give you an idea of the next real area, and the area that we would really need to see it break through on a closing basis, it's a 61% retracement, and the price is 1167. It's still considerably away from there, but a breach through that point, and we've really breached a major threshold, and that actually would start happening around 80 to 70 in that area. We break through that, we could head substantially lower, and then 1102. This is a really important number because it's a 50% retracement, but it's a retracement from this large move here, 50%. You can see these outer hash marks start from here. You can follow where these hash marks come from by looking at these zeros here. So all in all, we'll talk about this next week, of course, but we could see a pretty dramatic move to the downside in gold and silver also. Silver was just incredibly weak today. Let's take a look at that. So traders, if you recall from yesterday's show, now these hash marks, or these horizontal lines I should say, we put in, one of them we put in yesterday, this lower one here, and really I've just converted it into a weekly chart. And really what I was looking at was the fact that, and again, this is a technical study, not based in any way on any kind of fundamentals, but I saw this really important support level. And the reason that I believe it was an important support level is, if you take a look right here, this is the support in the bottom of the market right before this dramatic climb. You can then see we touch again here. It's above that area here. But the key was, to me, is once we broke through that area, then the next and only real area we had was this area right at around 16. And so that's why I was looking for $16 silver yesterday. I just didn't think we would see it that quick. Let's see where gold wants to trade, if it's going to be able to effectively get back above 1200, if 1200 will become support or resistance. We're right at that point. My sense is that it will probably be resistance. Traders, maintain your current short position in gold, maintain your current stop. For those of you who follow silver, when I said that silver was going to $16 yesterday, who got short, and I've gotten a couple of emails to that effect, bravo to you. As I said, we haven't really been effectively trading silver but I've been telling you what my sentiment has been, so those silver traders have been able to react on that, and that was a pretty significant move. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up. Bye-bye.